Hi guys, thanks for tuning in to another episode of Nuggets News. Well, we've got another monster episode to get through. I'm going to whip through all the macro news as well as the crypto headlines for you. For those of you that are new to the channel, we do welcome a few hundred new subscribers again this week. This is a brief overview of all the news, and we do go into things in far more depth in other videos, interviews, and particularly in our premium group. So if you want to just start off and you've got friends or family that are beginners, we've got all our free resources over on our website, and particularly MetaMask. I know a lot of you have been having trouble with that. So look, make use of these. We're adding to these every week. We want to have hundreds of these by the end of the year, all free. And if you want to take that education a step further, and if you're busy and you can't keep on top of it all, that's why we offer our premium crypto community. So I want to also thank everyone that has stepped up. So a number of senior members, those of you, over 1,000 of you have been with us for over 3 years now. We welcome 70 odd members to the group again this week. Some of you that have taken it upon yourself to do tutorials, and Maddie that's been doing these NFT updates. I think we're going to start doing a regular monthly segment on NFTs and gaming, because as I predicted, that space is starting to blow up. So if you want to see that, let me know in the comments down below. I guess the final bit of housekeeping is, I know there's been a lot of scam ads on YouTube, so I've decided to not put any ads on this video and on other videos as well if I can. Now, YouTube won't recommend my video if it doesn't have ads in it, because YouTube doesn't make money. Now, I'm not fussed about not making money personally. I'd rather have people not get scammed, but all I ask in return is that you do smash that like button, leave a comment, and those things do help the YouTube algorithm, so hopefully they balance each other out. Let's get into the local news. So Australia actually had a bit of a surprise with the jobless rate falling this week. Now, if you look at the data in a little bit more granular, then it's not as good as it seems. A lot of that part-time work and people wanting more hours, you guys know the drill there. Now, 1 in 5 borrowers have ghosted their bank. In other words, they're not answering their calls or their emails. And this is the flow-on effects that I don't think we're going to have a good idea of what's going on in the economy until the end of the year. JobKeeper, we're looking to cut that back. That's going to be around $10 billion taken out of the economy by Christmas, when we would normally expect the economy to be growing and people spend more around that time of year. So again, that's why I keep saying we're going to get a lot of data in the next few months, and Martin and I go into that extra level of detail for you in our monthly update. But the RBA are now weighing on the currencies. So they're saying a weaker Aussie dollar would be better. And this is something that I've spoken about a lot over the years, that the RBA they're too nice compared to these other central banks that are just going crazy with negative interest rates and printing money. And Australia is becoming the cleanest dirty shirt in the laundry, and our dollar is going to continue to strengthen even though our economy is in recession. Now, one thing I know that a lot of you want me to cover is what is going on in terms of our freedoms, civil liberties, and Australia. We're making world news at the moment with these new, I guess, laws that they're looking to put into place detaining conspiracy theorists. So look, who gets to determine what's right and what's not? I put out on Twitter things like, I don't agree that the earth is flat, but there's people out there that do. But where do you draw the line about illegal versus legal? And there's been plenty of conspiracy theories over the years that have turned out to be very, very true. So it is crazy to me, even since I started the channel a few years ago, how quickly Australia is kind of becoming the worst and the laughing stock of the rest of the world. So we are going to see more and more, I think, civil unrest if this continues. And things like this were, again, just conspiracy theories 10 or 20 years ago. And here it is, talking about implanting biochips, and everyone's going to have it. And in China, we've already seen all this get integrated with their social credit system. So it is pretty scary stuff. And look, I'll be out there and fighting the good fight for you on all those fronts. Now, Chinese Foreign Ministry saying that Australia is turning away all these Chinese companies in the name of national security. Naturally, it'll dent confidence of Chinese companies. And I think he means, to invest and to send students to Australia to study. I just don't like how quickly the relationship's gone pretty sour between the two countries. Now, China has had a lot of trouble with a number of banks already going under. One of their largest banks, again, falling short when they tried to raise more capital, and they're selling these bonds and they're just not getting there. So a lot of bailouts are going to be coming from the Chinese government, but their economic data is actually looking pretty good across the board, if you believe it, and their currency has begun to strengthen. Now, one of the things that they're talking about is the commodities that they're just starting to hoard and stockpile. And over the years, I've sort of said there's going to come a time when all these fiat currencies that are backed by nothing, the other trade partners are going to start to question, why are we giving our resources to another country for something that they print out of thin air? So surprisingly, oil stocks are beginning to dwindle, which you wouldn't expect at the moment. Stories now coming out about, commodity prices are rising. We've seen record prices on things like soybeans. I think wheat was another one. And if we have a look at this cycle in terms of the equities versus commodities and the historic sort of ratios, commodities are still really low by those historic standards. And I think that's where you're going to have a big swing, because so much of the world is now, I guess, valued, or the money, not value necessarily, has flown into these things that are just not real, not material. And I think real things, it's going to be where the money flows. And I'll tie that all together once we get through the rest of the news. Now, I just wanted to share this one with you as well. Hundreds of mystery seeds have been turning up in Australia as well as America. And look, authorities are warning people not to plant them. So let me know if you've got or heard of stories about this, but apparently it is happening to a lot of people and we don't know why. Here we see China's GDP passing the US, or I guess on target too for real GDP in terms of those numbers. And this is why there's so much friction between the two economies, because they're battling for 1 and 2 on so many fronts, but particularly for the world reserve currency. We know that China want more power and they don't really like the US have power. So Ray Dalio is warning about this. The interview I've got with Brent Johnson this week, you're going to love. Absolutely love that, and with Raul as well. So I'll talk about that a little bit later in the video. But basically, this is the slide about the 3 trillion of debt and who's been buying it. And we see that foreigners, they just don't want that debt anymore. But Japan, they've really stepped up in the last 12 months, becoming one of the biggest buyers of treasuries. That's very interesting. There's the next top 10 after the top 2 there that are by far and away the biggest 2. But this is those currency wars playing out, and do you have the reserves? So how life changed after stimulus, and just like the central banks have never been able to back off, I think this is the situation that governments are going to find themselves in. Every time they try to taper stimulus, they're going to go back into recession. And here we can see that huge V-shaped recovery in terms of total retail sales. In a number of areas, it's bounced back. But that's basically because everyone's been given these huge paychecks, and the markets became addicted to that free money, and the economy and I guess citizens are going to become addicted to that free money as well. So the House unveiled that 1.5 trillion bipartisan relief plan. It didn't get through. They're saying they're sticking to this 2.2 trillion stimulus bill. I'm not sure if this is going to get through before the election now, and that might be an excuse for the markets to have a bit more of a correction. But look, Trump's obviously not happy about that. He's saying he wants to get those stimulus payments out there. Let me know what you think about all that in the comments down below. But even Biden is now promising more, multi-trillion-dollar budget. How's it all going to be funded? Well, rolling back some of those taxes, taxing the wealthy more, big corporates more. So it's the debate about, do you even need to do that, or are we going down the path of modern monetary theory? And everyone is promising things for free. Cancel student loans up to $50,000 per student. Democrats talking about now. So it's that time of, year or the cycle when everyone is promising free stuff. Now, some people have been rorting the system, and we see a lot of fraud in California and these jobless numbers. Always hard to know what's exactly accurate, but Mnuchin coming out and saying this isn't the time to worry about those fiscal deficits or the Fed's balance sheet. So, just spend and do what we need to do. Just in America as Australia, we've seen a lot of people having to raid their retirement accounts, and America's already got over 100 trillion in unfunded liabilities. They do not need more people on the pension because they've got no retirement savings yet left. Now, evictions, they're continuing to spike. Big landlords as well as little ones. Trump's issued this ban about not being able to kick people out, but apparently it's still happening at higher levels than before. So I'm not sure what is going on there and how they can enforce it. Now, at the same time, we've heard about the price of food going up in America and a lot of places around the world. And apparently, McDonald's is running out of burgers now because of this Travis Scott promotion. So I'm not sure if that's directly related, but the price and the cost of living and food is going up for the average American. Here we see Walmart staff finally getting that 11% pay rise, the largest in the US, largest US private workforce. Now, the catch here is that they're not going to get those bonuses. So depends on what your individual, I guess, salary is, but whether or not you come out better or worse off. So I guess there's always a catch, and it's funny when you hear those stories. The Fed are continuing along their lines of 120 billion a month in QE, supporting the flow of credit to households. We know that very little is going to households or small businesses. It's going to the top end of town and to the markets. But look, they basically didn't give the market what they want other than to promise that rates would be low for at least another 3 years. So look, we had a few people dissent, but other than that, most of the Fed have agreed that rates are going to be low for that long, which is almost a record, and then things are magically going to bounce back. But the market wanted more. They wanted more stimulus. And at the moment, the balance sheet has just stalled. That money printing has slowed down. So they weren't dovish enough, or they didn't promise the markets enough money. And sure enough, that's when the tech stocks that are fully priced began to roll over. It's just so sensitive at the moment. Like every word that central bankers say are moving these markets. The pound tumbled because the Bank of England said it discussed the implementation of negative interest rates. So look, one by one, every country is going down this path. You look at the chart, interest rates have just gone down and down over time because we've borrowed more and more from the future. And you can't have all this debt and have high interest rates. It's just never going to happen. So they're either going to be at zero or negative. Now, here we see the central bank balance sheets tracking demographics. So look, I'd argue we don't have enough data there, but it's just one of those factors where less and less people are working in relation to the number of retirees, and those retirees are looking to sell their stock, downgrade their house, and all those pressures are deflationary. So central banks are going to have to step up to the plate and just print so many trillions of dollars just to offset what's coming. Now, the Fed can kind of do that more than these other countries can. So this is why you hear stories, places like Turkey, their currency is just getting crushed. They've paid down all their reserves that they had to try and stop their currency from plunging. But once you run out of reserves, all that money printing that you do is not soaked up by the rest of the world, unlike the US dollar. So the Fed board have shared some of their hypothetical scenarios for the second round of these bank stress tests. And I think the Fed know that something is up. Now, they've rehired BlackRock this time to help calm the markets. So the ETF business has made so much money from being hired to help out with that corporate bond ETF situation and buying. And I'm not sure exactly what the technical definition of calm the markets is, but once again, the Fed are turning to BlackRock, a private company, for help. Milton Friedman was wrong. This is an opinion piece all about income inequality and how basically everything that is understood about economics is almost wrong, and it's just not working out the way that were promised in the textbooks. Wall Street workers are trying to get their bonuses because Biden is talking about cracking down on those types of things. We had a judge who rejected, found it offensive that the Hertz higher ups were trying to pay themselves these huge bonuses when the company's going into liquidation. So it's just nuts how these guys continue to get millions, put in their trust, fire employees, let everything else, the shareholders get smashed, but they still seem to make out pretty well. Bank credit swaps signal concern over world's weakest lenders. We know the banks are kind of seizing up like the repo market, where they're just not really willing to lend to each other at the moment. They're quite happy to speculate. UBS contemplating this mega merger between Credit Suisse and themselves. I think this would be one of the biggest deals since the financial crisis, because a lot of these banks have got sour books, a lot of bad credit default swaps, mortgage-backed securities, junk bonds. So you're trying to merge these banks and get them into a position where their balance sheet is a little bit stronger. But even that is probably not going to happen without central banks, again, printing trillions to buy all these bad assets. And all the mistakes that they made they don't have to give their bonuses or their salaries or their shares back because they made mistakes. Central banks come in and bail them out. So there's no downside. This is the crony capitalism we keep talking about. Another example here of some of these commercial mortgage-backed securities, $700 million looking like it's on the verge of default. And these things can start a chain reaction because they're all bundled into those ETFs or CLOs, collateralized loan obligations. You guys have heard me talk about this time and time again. And now we've got things like even the governments that are worried about defaulting on their municipal bonds, and they're using things like city streets to collateralize the bonds. So I'm not sure what sort of quality collateral that is. And, some of the macro commentators are now starting to talk about even Bitcoin being, at the end of the day, it might be the ultimate collateral, but we're starting to see some very strange things. And this is all deflationary. There's just not enough good assets, hard assets, real assets to back up these, quadrillions of derivatives that have been issued. All right, so US high yield bond issuance, again, smashing records. So while the cheap money is there and investors are hungry because they can basically borrow or even get paid to borrow money, they're just issuing these bonds. And if the market wants to keep giving them billions of dollars to pay themselves bonuses or buy their shares back, it is happy days for these corporates. You'd probably keep issuing bonds too. But what this does, it just creates these zombie companies. And the estimates, whether it's Australia, the US, or Europe, it's just going up and up and up. The number of companies that shouldn't really be alive, and we should let them fail. And those people should be getting trained up and getting new jobs and modernizing the economy. But it's just not happening because central banks are trying to play God. Okay, pushing on. Here we see that 84% of all S&P 500 assets are now intangible. This is what I was talking about before. Real, phony wealth, ones and zeros in computers versus real assets, the farms versus the equities and the derivatives. And all the value has gone to this cybersecurity non-existent land. So intangible assets versus tangible, that is probably the greatest wealth shift of our lifetime, where I think you need to be parked and learn how to capture that. So the super rich have been stepping up their stock selling game. I've been covering this every week about how the insiders are selling, world's wealthiest 3 billion since August. So they are selling. At the same time, we've got JP Morgan warning of forced selling. So coming into the end of the month when they've got a balance and they've had a lot of people, withdraw from some of their funds, they need to sell these positions. And this is coming at that time when there's very, very little liquidity. A lot of the bots, they pull back when markets are going down. And this is where the Fed have become the backstop for everything. So if the markets crash, the Fed need to step in there or get BlackRock to step in for them. When the bond markets crash, the Fed need to step in. When mortgages are, they're all defaulting on the banks, the Fed need to step in. When governments need to pay everyone because no one's got a job and no one's buying the government's bonds, the Fed need to step in. And the Fed have become the backstop for the entire world. And I think they're going to have to print 10 or 20 trillion dollars in the next 12 to 24 months. And those sort of numbers are going to send gold and Bitcoin a lot higher. Again, we see a bit of a rotation. A lot of people did buy the dip. So this is just US domiciled funds, and they did look to buy certain assets. For the first time in a while, this is a meaningful flow of capital back into some of the equities. Now we've finally had a bit of a pullback. A lot of that is going into the tech sector because they are generating very strong free cash flow compared to most of those other companies. Now, I am going to mention this bit of crypto news in the macro segment because I think this is one of the most significant bits of news of the decade, when we're going to look back and say, this was the first company to step up and buy $500 million of Bitcoin, MicroStrategy. And now we're probably going to see others do it. And it's these tech companies that have all that free cash flow and strong balance sheets that are now saying, we don't want to sit on dollars. They're about to be inflated away. Now, just remember, you've got 1 million millionaires in China, 800 billionaires in Europe, 800 billionaires in the US, trillions in negative yielding bonds, all this money parked in all these other assets. And all of a sudden, it's not looking like a good place to call home because it's all, I guess, still part of that fiat world that's about to be debased. And I think that a number of people are starting to say it now. Anything that is scarce, whether it's gold or Bitcoin, investors are going to look to park there. And when MicroStrategy, I just can't understate the significance. And I think right now as we speak, there's probably other companies that are looking to buy Bitcoins on their balance sheet, and then we'll see a sovereign, a government, and then we know the dash for the wealthy, the upper class, middle class. I think this is what the next cycle is going to play out for in the crypto markets. All right, so investors flooding back to those tech stocks as we just covered there. This is the zoomed in version of that chart. So $20 billion of inflows just recently, and that is the biggest month for a couple of years there. Finally got that dip that they're waiting for. Now, if we actually have a look at the non-commercial positions, we can see a huge short position. So this is the biggest position since the GFC, the non-commercials. So they are betting that markets are going down. Now, whether or not they're right, and they can get squeezed and maybe propel the market higher, but they've basically been on the right side of this bull market for 10 years. So look, this is something that you want to pay attention to. When you consider that we haven't had the IPO market been this bubbly since back in 1999. Companies that are just raising crazy amounts of money. Even Warren Buffett was throwing money at these sort of things after saying that markets are overvalued. So it's kind of like, do you watch what they do and not what they say? Are they talking out both sides of their mouth? I'm not sure, but it's such a dangerous situation when the Robin Hood and retail traders are discovering these 3 times leveraged ETFs. Now, I've spoken about why you want to avoid these products, but this is the fund flows, record flows into these, and I just think that some of these investors are in for a really rude lesson. Goldman Sachs and these guys that are paying for all that front running, all that data of all the Robinhood options traders, they are making a killing from this on some of these large names that are being played through options. General Motors, I spoke about this a little bit last week. So a lot of competition now in that electric vehicle space. And I think when the correction comes, it could get nasty pretty quickly. TikTok CEO invites Facebook to join the court challenge. So these are the big tech guys that have been leading the charge. But like I said, a lot of them have troubled waters ahead, in my opinion. So whether it's TikTok that Trump's planning on banning the downloads of, unless there can be a takeover or a US version. Facebook being sued again for spying on users through their Instagram, using the camera there, no surprises. And Facebook looking to censor internal debates between employees. So a lot of employees, and there's some good documentaries out at the moment about what is going on with all the social media networks and how they're farming our data, and I guess using psychology just to get people addicted to these platforms. Apple and Epic Games, that is really heating up there. So this all just plays into my bullish thesis on the decentralized tech crypto world taking over these big tech giants. And look, we know that they'd become such a huge percentage of the index that when they finally turned, it was going to be a big percentage move for the baskets and the ETFs, and not just those 5 individual stocks. So do we have all the ingredients for a market crash? Instability, leverage, valuations, the psychology, ownership. We've spoken about the put to call ratios, and traditionally you'd argue yes. And here's a list of 16 things. Traditionally you would say yes, and Warren Buffett's favorite indicator screams sell. But is it different this time? So even Warren Buffett has gone into gold. And a lot of you guys have been asking me when are eToro going to add some more gold stocks. So this is the one that Warren Buffett bought, and they have begun adding some more of those stocks. So I'm actually glad they don't have any of those triple leveraged ETFs or anything crazy, because I don't like those products. But if they're adding the larger market cap manias, it's good to give you that variety and that choice. And that promotion is still running, guys, where you can get the $100 free Bitcoin if you do sign up with that link down below. All right, institutional demand continuing to drive gold higher. I think it's just a matter of whether or not we have a pullback and how long that goes for. But big picture, then yes, I definitely think gold is heading higher. Once again, we see more banks being charged with manipulation and spoofing orders. COMEX funding, sorry about Henry barking there. COMEX fudging the physical delivery data. That's for the gold market and for the silver market. And this is just all going to come back to haunt them, I think. I'm a big believer in karma and cycles and all this fudging, and whether or not we find out that they have been suppressing the price of metals, they're going to find their equilibrium at the end of the day. SEC has been paying out big rewards, $10 million to these whistleblowers that have been calling out the BS. So I do love to see that. And look, the more whistleblowers and calling out the banks we get, the better. So this is one of the final charts I want to show in the macro section. The S&P 500, if you looked at how are these asset classes pricing in a recession, and stocks are basically saying 0% chance and bonds are saying 100% chance of the recession. And what I want to, get you to understand is that what the Fed and that are doing is just so unprecedented. It's literally, if they print money, things can keep going up. If they stop, we're probably, we're going to head into a depression, let alone a recession. So they know that they're playing that balanced game, and money is looking to go into things that it normally wouldn't. And it's no longer a case of, stocks and bonds and having a nice mixture, and that presents, uncorrelated assets as diversity. It's the way to go. People are buying things like baseball cards, artwork, memorabilia, rare plants. I mean, this is what I was talking about, whether it's China hoarding commodities or the super wealthy buying plants and baseball cards. Something is up. Okay, this is not normal, and money is flowing into assets that it never has before. When we look at charts like this, these pension funds and how much exposure they have to hard assets, whether it's artwork, baseball cards, Bitcoin, or gold, okay, I think this money is going to rotate, and there's still a lot of money on the sidelines that wants to find a home. And like MicroStrategy, I think a lot of companies are going to decide that these hard assets are a better place to park than even just sitting in US dollars or bonds. All right, so into the crypto news, and CoinGecko, they have become one of our partners, guys. So I'm very happy to support them, and I love what they do. And they've been leaders in adding things like, DeFi and farms and extra utility for us. But this is the 7-day chart here, which you can order it by. And one of the things we've been predicting for the people who it's their first market cycle, make sure you're taking profits, because you can have a very quick 20, 30, 40% correction in a lot of these pretty decent projects because they've had such a good run. And I guess that catches a lot of people off guard, but that is something that we have seen unfold this week. We've been talking about it. We've been talking about rotating into Bitcoin and taking some profits. So hopefully you have been keeping to the game plan there. Another bit of housekeeping I want to mention, Real Vision are launching their, crypto business. So just crypto interviews. Now, I know there's a lot of crypto podcasts and YouTube channel already, but hopefully they're going to have great content like this. This interview with MicroStrategy CEO was just brilliant, talking about how he went about it and why they went about it. And I'm pleased to, share that I will be making my debut on Real Vision Crypto in the next few days. For those of you that are Real Vision members, and for those of you that are Nuggets News members, you'll get that as well. And then I think it's going to be out for the public in maybe 4 to 6 weeks or something like that. But I do like the fact that they're going to be covering more coins, because look at covering Nexus Mutual. Who would have thought that there was any, professional or traditional commentators covering altcoins and projects like this 12 or 18 months ago? So look, I do think that there's going to be a lot of new eyeballs, hopefully on a lot of the best projects and projects that we cover. I love watching Real Vision, and I know they watch some of our content as well. Okay, so all about Nexus Mutual is all about insurance and protecting the DeFi space and all those smart contract bugs. And once again, we see BZX being hacked for the 3rd time. So that is why I did think Nexus Mutual was one of the most important projects. And look, I love the fact that more people are going to feel comfortable maybe using a DeFi protocol and getting some yield, because even if things go wrong, they can now get that cover like the traditional world. So very cool stuff there. In terms of the Gitcoin grants, our monthly Ethereum episode, and all the Ethereum education and tutorials we can do, I want to give a big thank you to everyone that's donated to that so far. I might do a tutorial on this for those of you that don't know how it works. If you donate $1, that can actually be matched up to $50, $70, or $100 from the pool of funds. So from the Ethereum Foundation, for the first time ever, we had Iron Finance, so the guys over at Wi-Fi, and Synthetics as well, had some huge donations to the pool of capital. And what that means is they divide up all the money, and when people are donating to your project, it gets matched from this big pool of funds as well. So that's really cool stuff. Yeah, all that money goes into, I guess, making the community and the research better. So thanks, and I'll put that link down below. Other projects are starting to experiment with how they're going to fund projects. So IOHK, Cardano, $250,000 for Cardano projects. And we're seeing mixtures of on-chain treasuries and governance, but it is a problem that all projects have to just try and solve, particularly if they're decentralized. How are you going to fund development and innovation on your coin? Now, one guy in Australia that was trying to fund himself through crypto mining at the CSIRO has been caught. So, look, I thought that was a bit of a funny story, mining, I think it was Monero and Ethereum with supercomputers at the CSIRO. But if that was one of your mates, let me know in the comments. The RBA have come out and said that there's no need for a central bank digital currency in Australia. So they keep flip-flopping on this. I really don't know what is going on, because a couple of months ago they were experimenting. But either way. Little Aussie companies sharing have been added to the list of blockchain companies that China's BSN are tapping into. So I might try and have them on the channel soon. I know they are a bit of a crowd favorite in the Aussie community. And look, China have pivoted slightly here when they announced that they're going to be using these couple of dozen blockchains, but all of a sudden they're saying they're going to make them permissioned. So it's like a fork or a clone, but basically China's in charge. They're not going to be using the public blockchains per se. So a bit of an interesting pivot there, but should we be surprised from China? VeChain offering services to 130 Chinese firms here. This is all about food safety, tracing, trackability, which we know is a great use of blockchain stuff. So good news for VeChain. And Libra is back on the map. So look, Libra have been in stealth mode after they got, I guess, kicked to the pavement a little bit by regulators. But Blockchain Capital have joined the Libra Association. They've also hired former HSBC CEO, so getting the bankers on board for Libra. But look, I think that, yeah, there's just way too much competition now. Look, maybe Facebook have got those billions of users, but every man and his dog seems to have a stable coin or a payment system of late. The Bahamas are launching the Sand Dollar, so everyone's going to have to think of a unique name as well. One thing that was a bit of a letdown last year was the STO space, and Overstock's T0 are claiming a record month for securities and crypto trading, which is great. We've seen INX, which is an STO token, start to be distributed out as well. So look, do things by the book, and it looks like regulators are coming around to that space now. Unicorn has been charged a $6 million fine over that SEC settlement. So look, if you are a security, then they're still coming after you. Now, one project I think is honestly about to get a tap on the shoulder is Digitex. Now, I know some of you are fans of the project, but in their recent update about where they want to go and what they want to do, basically it is all centered around making the price of the coin go up, which the SEC do not like. They've issued a stable coin which you need $5 to back every $1. So I don't think that even makes sense. They're saying they're introducing a staking program just to lock up supply and try and make the price go up. And again, I don't think it's a good idea that using that sort of language. They've also launched things like watching adult entertainment and gambling. So look, a very, very interesting pivot. One that I think has let their investors down a lot over time. So look, I'm glad that they're trying to do things, but to me, it is just some very strange pivots in multiple directions, but time will tell there. FinCEN announcing sweeping regulations for the laundering. Look, not too much to say here. You've got to do the right thing, okay? Regulators are going to come after you if you're trying to do the wrong thing with crypto at the end of the day. New York Attorney General calling for Tether to hand over these documents ASAP. That battle has been dragging on for years now. Kraken have finally won a banking charter. So this is a huge deal. A first, particularly because it's in the US. And I kind of joked here that Kraken are the ones that actually need to be careful, because as we just covered in the macro section, we've got these banks, which are the ones that are doing the dirty and getting in trouble all the time. I think banks have paid $1 trillion in fine in recent years, and they're still making record profits and handing out record bonuses. So it's just a joke what that industry has become, and that's why it's so ripe for disruption, whether it's Bitcoin or Ethereum and DeFi, any crypto really. I just can't wait for when we make so much of the banks just irrelevant. Now, some of this DeFi stuff is making a huge impact in these smaller countries. Paxful now opening 4 schools, 96 to go. That's just fantastic to see. Some of these other projects which are donating the yield from DeFi, that's some of the, even the airdrops from Uniswap, which we'll get to, that's, a year or a lifetime of money for some people in these poorer countries. One thing I think that regulators are not going to allow for a lot longer, these ATMs, particularly the ones that are anonymous. So I don't think we have any anonymous ones in Australia anymore, but that's probably going to become the global standard. But look, at the moment, there's a record amount of ATMs still out there. The EU have surprised us, saying that their comprehensive crypto regulation is going to be out, but not for another 4 years. So look, nothing to worry about there for a while. Tezos did become the choice for the digital euro, which surprised a lot of people, and Tezos didn't react that strongly, to be honest. But look, that is a choice that all central banks are going to have to make. And privacy coins as well, they are continually in the radar. A lot of exchanges have delisted them recently, but this was a great interview with Tor about the Secret Foundation and how they've, I guess, pivoted from Enigma, the token swap. If you've been following that project, check out that interview, because it was very, very interesting in terms of private smart contracts and privacy coins. Binance, they are going after DeFi as well, so calling it CeDeFi. Look, you guys know that I think that this is all just a bit of a stepping stone, a middle ground, because we either have these banks or the neo banks, or we go full DeFi. And these exchanges, I don't think they can really compete in that space longer term. A cool project from Aave and Synthetics here. So this is credit delegation and leverage trading, no slippage with synthetic assets. So Marquette, keep an eye on that one. And I do have Stanny from Aave coming on the channel pretty soon. Secret Network I just spoke about. I did just want to highlight Haven. I love the idea of private assets. I just think this is walking a fine line again with regulators. And I wanted to mention their terminology. So all their coins that have the prefix X, it's actually different to XDAI, which is a different project, the state coin. Now, Stanny here from Aave has said AXDAI ? So basically the assets that are on Aave have A as their prefix and then the name of the coin. So what he's saying here is I think XDAI is going to become another project, another coin that you can deposit and use in the Aave Lend system. So XDAI is a layer 2 scaling solution that Gnosis is currently using for their prediction markets. I did a big write-up on members for Gnosis during the week. We covered this one at the beginning of the year when it was, I think, $6 or $8, and it's hit $80 since. And it's still only trading at its book value in terms of the Ethereum it's holding. So, guys, if you haven't read that write-up and you remember, just search for Gnosis and you will find that. Dash is also looking to pivot a little bit, so getting into Web3, which is another one of the sectors I'm bullish on. So going into the decentralized cloud and storage computation space, which is very, very different for what Dash have always previously been. Chinese miners are threatening to fork a Filecoin, so this is very, I guess, topical and relevant at the moment. This is a good piece by Ryan Sean Adams, so I'm trying to get on the channel. He's talking about all these open source projects and how you're going to defend against being cloned or forked, because we're going to see it a lot. People are probably going to get sick of it. And remember that stage when we had all those Bitcoin forks? There's actually 100 Bitcoin forks, but you probably only heard of 4 or 5 of them. Now, another sector I'm so bullish on is NFTs and gaming. So what we've seen this week is some of the projects like Yearn Finance coming out with these insurable assets, or ways to deposit your insurance and earn this safe coin. Those devs had a bit of a split, so it's a very, very high risk space. Like I've said, avoid it unless you're an advanced trader and investor in the crypto space. But what I do like here is that NFTs are now collateral for DeFi, so you can use your artwork or your digital tokens as collateral for loans. Again, this is something that I've been predicting for a while. You can now use your real estate as collateral. yeah, it's just great to see this happen. So this is Iron Finance's, the way that they're using Nexus Mutual to underwrite their insurance, create insurance as a token or an NFT. You can then have that NFT on Rareable, which is a new NFT marketplace. Again, I've covered these in detail in the group. And you can sell and trade your insurance with other people. So rather than buying cover for yourself for 6 months, you might decide that you want to get your coins back a month later. So this allows you to trade insurance on different assets and on artwork and everything. So I really love that idea. NBA collectibles fetching 2 million in revenue. We've got Pickle Finance is another interesting one that's trying to close the gap between the pegs of all the different stable coins there using arbitrage. Curve also rolling out a dividend. So all these experimentation of token models, how they're going to pay the users, how they're helping to solve problems in the stablecoin space. This is a really maturing market that I think is going to compete with world forex and world currencies. By the end of next year, it's going to make a huge impact. Blockchain gaming network, Matic is one that you want to keep your eye on here. They've got a lot of partnerships and news announcements. If you're bullish on the gaming sector, you want to be checking out Matic. We also had Litecoin launch a little German-based game on the Litecoin blockchain. So look, all of a sudden, within a few weeks, it seems like everyone is getting into gaming just when they were pivoting and getting into DeFi. Carver are releasing this cross-chain money market for DeFi with the help of Binance as well here. Now, this is one sector that I am very bullish on, cross-chain interoperability as well. So Polkadot is a player in that space and looking to mint their own tokens. These are meant to be an even better version of an Ethereum ERC20 token as well on Polkadot. And the big one that you guys know is one of my favorites and we've been covering for 3 or 4 years now. Benny, fellow Aussie from Red Fox Labs, he finally dropped all the news that he's been maybe dropping some breadcrumbs about. But basically, Red Fox Labs coming out, new white paper, tokenomics, multi-chain support so they can issue collectibles and assets on everything from Bitcoin to Ethereum as well. And once you've got that Ethereum integration, obviously that opens up the world of dexes and DeFi and pools. They've said staking and even NFT staking. So hold some NFTs, be rewarded in more NFTs. Games that they've got launched, the rewards app they're about to launch in Vietnam. So look, that is why I have been so excited about that one. And check out that video if you haven't already. Awesome thread from our mate DCL Blogger about why he thinks we're about to receive a whole lot more of the airdrops that Uniswap made headlines with this week. So I completely agree with him. And we now have ways other than the blockchain, which you can use to see who's been doing what. Things like proof of attendance protocol. You're going to see games and communities reward the loyal holders and the users of their project. Did you go to that virtual meetup? You're going to get bonuses and rewards. And this is very different to VCs having the edge or whales having the edge. I just can't wait to see, again, where this is all going, where we can reward the users and those people that took the time to learn how to use MetaMask. This week, they all got dropped 400 Uniswap tokens. So if you used MetaMask or if you used Uniswap before the 1st of September, you're eligible to get those 400 tokens. Now, they've been trading everywhere from $1 up to, I think it got up to $7 or $8. That is a lot of money, and that's US dollars as well. So well done. A lot of the heavy users and liquidity providers got, some of them I know, millions of dollars. Now, if you've been using good hygiene in DeFi, you have a different MetaMask on every web browser. You've got different addresses for each, app that you use. And if you should have 10 or so different addresses. And again, those people that did, they got 10 lots of this drop. So look, that was a real awesome surprise. And I hope some of you did well out of that. I kind of was joking here that it sounds for Universal no longer yours because everyone rushed to sell. And if you understand Uniswap and you understand even Sushi, that's been a bit of a failure so far, they had an opportunity to compete with Uniswap and they mucked up, or the dev mucked it up for everyone. these guys make $400 million a year in revenue, and they're looking to try and split that up and reward all the users. So this is probably one where, yeah, you want to sell some of it if you've got that free money. But look, I'm quite happy to hold on to some as well. Now, I don't think it's a coincidence that they dropped this amount, which when it launched, it was valued at $1,200, and it's the ticker symbol. Maybe it's a coincidence that's very close to UBI, but at the moment, obviously, we know that Trump is debating this stimulus. All the governments around the world are, and they're trying to work out how to get central bank digital currencies or stable coins directly to people. And what Uniswap just showed them, that even without knowing who the users are, with a blockchain, it's very easy to do. And they could do it right now with an app and using a stable coin, even on Ethereum. And this is where I was, probably the one thing that I think they missed the opportunity here with was using a scaling solution to do this, because gas fees went absolutely crazy after this happened. But they could have said, hey, everyone, you've got to do it this way and use one of these scaling solutions. And that would have really showcased that, oh, hey, Ethereum has scaled if you use this, protocol. So anyway, it's good to know it's all there. This is the fee distribution, talking about the different unclaimed tokens, who's got what, and this is a great way to fast track, I guess, the number of users of your project. Unveil land is the other one that's I probably still think a leader, as well as synthetics in terms of the volumes and what they're doing. Great research from June Analytics and Spencer Noon. If you haven't checked out those, make sure you do. These are the promising scaling solutions. So optimistic rollups looks like it is going to be the number one choice for the best protocols here with the most users. And once they get on it, they're almost building an ecosystem that they want everyone to come and use. Ethereum's enterprise adoption has continued. So this is Essentia support for the baseline. So this is the privacy-based scaling solution and enterprise solution. And Essentia have got millions of users. Enterprise adoption on Ethereum continues to accelerate. This is a cool chart just showing the amount of Ethereum that has left exchanges and gone into smart contracts. So that is what we want to see. And remember, once we have staking as well, a lot of ETH is going to be locked up. So the more demand, the less available on exchanges. 100,000 Bitcoin on Ethereum already. Now, Pete McCormack did agree to have me on his show to talk to him about the different versions of Bitcoin on Ethereum, because he doesn't agree that it's even a thing. So make sure you guys stay at him on Twitter about making that happen, because he has promised to have me on before and he backed down last minute. But this is another version of the yield dollar, allowing people to take their Bitcoin, put it through a protocol, use it as collateral, get some leverage, mint US dollar stable coins, and look, you can get yield on your Bitcoin. This is so significant, guys, from an asset that people joked about that no good because you can't get a yield on gold or Bitcoin. Now you can get a yield on all these things if you tokenize them and put them into the world of DeFi. Very attractive in a world of zero or negative interest rates. Bitcoin, more upgrades for the Lightning Network, which I really love in terms of routing in particular. So look, it's good that Lightning Network is being upgraded and still seems to me to be at a slower pace than some of the other blockchains. But tying this all together, central banks are printing $1 billion, 1.4 billion every hour. Okay, so think about that stat. And this is why people like Michael Saylor over at MicroStrategy bought Bitcoin. And he explains how they did it here. So have a pause of that and read exactly how they executed that trade if you like. But as I said at the start, more and more CEOs, companies, governments, high net worth individuals, they're going to work out that they need to protect their wealth from all the printing that's coming. So look, maybe we're going to coin the term QB, and they've started a trend because their stock has done very well out of it. And when you look at the yields that are available, whether it's the high risk yields or even just the safer yields, it's just trillions of dollars that can pour in, and when it pours in, it's going to drop the yields, but it's always going to be better than what's available in the legacy financial world, because that world is not growing. It's stalled. That world is burdened by huge debt, okay? the crypto world is just growing and blossoming, and that's why the yields are always going to be better. And I think there's $1 trillion dam wall of money that's about to come in to where it's going to be treated best. Jim Cramer, add him to the list. He told everyone on CNBC that he's put 1% of his net worth in Bitcoin this week. Bank of England have spoken about negative interest rates. This is the best possible ad for Bitcoin. So guys, tying it all together, looking at the charts, this is the S&P 500. This is what I want you all to be aware of. This is the old high, and we've gone through, fallen back through it, and we've tested it twice. So until we regain that, we need to be very cautious. Now, I'd love for Bitcoin to break its correlation, but at the moment, everything is, I guess, in a tightening pattern, waiting to see if the Fed and the government are going to throw a few more trillion at the markets or not before the election. So gold, tightening pattern, silver, tightening pattern. The US dollar index is just waiting to see whether or not that was the bottom or we break down further. And if we break down further, all these assets, including Bitcoin, I think are going to really, really take off. So this is the log chart. Absolute beautiful symmetry in TA here. We've broken out, we've come back and retested it. Look, maybe we have to range trade for a little while, even into the end of the year. I'm not too fast about that. I actually think there's enough bullish conditions for us to head higher, but I'm watching the stock market and seeing if that's going to drag us down or if we can break that correlation. But it really does depend on what the central banks and what the governments are going to do. So guys, that is it for this week. I hope you've enjoyed that episode. Please do us a favor and smash that like button. Subscribe if you haven't already. Share this around with friends and family, and I'll talk to you again soon. Cheers.